happening in the cement space. We have Ms. Jyoti Gupta, research analyst at Nirmal Bang Institutional Equities Research, joining us on the show. Jyoti, hi, morning. Wishing you and your team a very happy new year, and thanks for your time today. First up, help us understand how have you been noting cement pricing trends building up in terms of the quarter 3 exit rate when you compare them with the quarter 2 exit rate? What are your channel checks on ground suggesting?
Good morning. Thank you so much for having me on the show, and a very happy new year to you and your team.
Thank you.
So, you see, quarter 3 FY26 cement realizations have been muted, with prices declining by roughly around 2%, could be slightly higher sequentially across our coverage universe. Now, profitability was also impacted by a 10% cut in the state GST rebates and the sharp increase in petcoke prices by roughly around 24%. Now, these pressures were partly offset by operating leverage gains, which have reduced freight, other expenses, employee cost per ton. Although coal prices also fell by around 22%, the benefit was limited because coal forms around 35% of the overall fuel consumption at a pan-India level. That's the way we have calculated. So therefore, overall, this quarter, we should expect to see EBITDA per tons declining by roughly around 75 to somewhere 125 per ton sequentially, depending on your fuel mix for companies.
Okay, and talk to us if you've been seeing any price hikes being taken in any select regions, and if so, have they sustained? And if you could talk to us about the trade versus the non-trade cement price hikes as well.
So you see, we did have, in fact, it was expected that there'll be some price hikes in, quarter 4. There has been around 35 to 40 rupees across regions. Somewhere like South was something around 30 to 35. North is broadly almost entire region saw an increase of somewhere around between 25 to almost 35, 40 rupees increase. That was on the non-trade side. Trade, we'll have to wait for at least a week for things to actually percolate deeper and then see the impact. If you know that Makar Sankranti is coming and these are big festivals in South and West. So yeah, there could be some, the absorption could be a bit delayed. But I see overall, see what I see in the sector is that the sector is typically, is today's firmly volume-led cycle. Strong underlying demand is driving sustained volume growth, which in turn is lifting plant utilization and gradually improving cost structures through operating leverage. So, however, the strength is partly offset by the fact that large capacity additions across industry are capping pricing power and keeping near-term realizations volatile, limiting full earnings benefit in the short term. Over the medium term, as consolidation deepens and scale advantages strengthens, among top producers, the industry structure should steadily improve, leading to better pricing discipline and stronger and more stable profitability. In the short run, sector outlook remains structurally bullish but tactically mixed, with long-term fundamentals intact, and even as near-term price swings persist, and price increases will happen. In fact, we have seen we'll see one more bout in maybe this month itself. We just have to wait and see what's the absorption level in your trade and non-trade and trade for this quarter.
Okay, and Jyoti, you did say that near term you continue to be structural on the sector, slightly positive as well. And talk to us about the immediate quarter 4. That's usually a seasonally strong quarter for the cement sector, driven by a push in volumes. Are you expecting this quarter 4 also, quarter 4 of FY26, to show the same trend?
See, quarter 1, we've seen something like a 11% growth. Quarter 2 wasn't bad, somewhere around 7.4%. Quarter 3, if my numbers are right and we are correct, bang on, we should be seeing something like a 9 to 10%, 9% plus growth. So quarter 4 won't be behind. In fact, that's a heavy quarter, and therefore we should see a good 8 to 9% also in quarter 4. The demand is very, very strong. Typically, this quarter has been driven mainly by, Ambuja, Ultratech, JK Cement, underscoring continued, market share consolidation in favor of scaled, well-capitalized groups. Now, Ultratech, I believe, will remains the industry anchor, and I think it should be somewhere around 35 million ton plus for this quarter in terms of volumes. While ACC and Ambuja will see a strong momentum post-integration. So the pattern Normally reflects normal seasonality. So quarter two we saw a monsoon led dip, and you will see a sharp. We've seen a sharp recovery in third quarter. And fourth quarter will be a very strong quarter uh, from the last three quarters.
Okay, and Jyoti, talk to us about your pecking order when it comes to the cement space. Any stocks if you like?
So all my reports have Ambuja as my top pick in the large cap space, Ramco in my mid cap space, and Nuvoco in the small cap.
Okay, and lastly, just to sum up this conversation, talking about the kind of real estate demand that we have been seeing, yes, it's been steady, but it's obviously not the rate at which we've seen it in the COVID era and slightly post after that. Give us a sense of what do you think the cement demand is going to shape up to be like in the near to medium term?
See, what I understand is uh, when we look at real estate, so there's a even when we look at other reports also, real estate has been very strong in terms of luxury and ultra luxury segment. Now, affordable housing may not be growing at a similar rate. In fact, it could be muted. In terms of infrastructure growth, which I see, South is doing exceptionally well. In fact, the demand movement that we've seen is would be more South led, followed by North, West, East, and then Center. Of course, Northeast has been the demand has been pretty strong because of government capex. But I think broadly the sectors which are driving the growth is defense capex, which is driving most of these regions, especially South and the North, and followed by then other infra projects, large key projects, in fact, complex projects which are driving cement growth.
Okay. And lastly, Jyoti, you did briefly mention the merger, the big merger that we've seen in the cement space. Despite this, you still believe that UltraTech Cement will continue to be the market anchor. Talk to us about what opportunities now present themselves in the cement sector after this big consolidation, and then what the market share perspectives could look like.
See, the for Ultratech, because of the pan India presence, we cannot ignore the kind of presence Ultratech has, both in terms of brand, in terms of retail segment. Uh, Ambuja, ACC Ambuja will the presence will strengthen, but yeah, in the short term, possibly if you see, in fact, if you see, Ambuja is gaining market share. In fact, over the last couple of, if you see in the last three quarters, they've actually gained market share, and gradually you will see that, and smaller players will somewhere lose market share. So till that time, I see Ultratech as the anchor for the industry. In fact, uh, you will also see consolidation to further, pick up pace, with large and well capitalized players expanding, rapidly through both organic capacity additions and acquisitions. And smaller players and leverage companies will come under pressure, under increasing competitive pressure. But over time, this should translate into a more consolidated industry structure, improved pricing discipline, and structurally stronger profitability. So, therefore, I feel that uh, there will be opportunities for Ultratech, and we'll see how the industry unfolds going forward.
Okay, so thanks for that outlook, Jyoti, and good to be chatting with you. Thanks so much for your time today.
Thank you so much.
Okay, viewers, on that note, before we slip into a very short break,